versus bears, and there were plenty of stocks to choose from, but we've chosen Tata Elxsi because it's an interesting conundrum. On the one hand, there is margin improvement, but the stock is under pressure, down about 5%. There is an impact of the new labor codes as well, and the commentary also something to bear in mind. So to put all of that into perspective and give you the bull case and the bear case, we're joined by Jasmeet. Jasmeet, which one is stronger?
Well, Alex, thank you for that. As rightly said, the overall market, we see a positive up move in terms of numbers, what we are seeing for Tata Elxsi, but then in terms of the stock performance, the stock is tanking in trade. Now, here the analysis of bull and bear case, we see the bull case as there's been a positive surprise in terms of numbers that have been beat in the estimates, and also the margins have expanded with a reasonable size. But in terms of bear case, we see the brokerages have continued to remain bearish on this particular counter on the back of various reasons, and that with the industry, the OEM-led demand, as well as the overall margin expansion plan going forward. If we look at the next bull case, we see that the overall growth was led by the transportation segment, which contributes only 55% of the overall growth, which is a bull case. But on the other hand, the other portfolio remains still tanking in trade. The healthcare and the media segment, which contributes roughly 45%, sees a slight downtick, and the deal wins in this area have been slower. If we look at the next bull case, we see that the overall lower headcount and improved utilization has something that boosted margin this particular quarter, but brokerages are penciling in the wage hike coming in for the Q4 will overall take the margins back to the older range, and there will be implications on margins. If we look at the next bull case, we see that the management remains confident that the Q4 will see a demand uptick, and the projects that did not get signed in Q3 will be signed for the Q4. But on the other hand, we also see that macro level uncertainty still continues for the overall IT firms, especially for the ER&D firms, where the OEM-led demands is still slower altogether. If you look at the next bull case, we see that the Morgan Stanley raises the target price of 15%, but they still maintain their old rating of underway. But on the other hand, the bear case remains that the valuations are rich. The risk reward for this stock remains unattractive at this point in time. If we look at the overall analysis for this particular counter, we also see that the bull case, HDFC Research adds and retains this particular counter with a target price of 6,300 odd rupees. On the other hand, the bear case, the Kotak Securities maintains the lowest selling price on this counter at 4,200 odd rupees. If we look at the overall analysis of this particular stock, the stock stands at 2 buy rating at this point in time. The hold stands at 4, while the sell the highest at 12 odd, and the return potential expected is 9% lower. This is after the stock has already tumbled 4% in trade today. So all in all, we see a good set of numbers, but the overall macro remains still weak.
Macro is remaining weak. Numbers are pretty strong. Thank you, Jasmeet, for that. Dharmesh, how are you looking at a Tata Elxsi? Because a strong set of numbers, but good amount of profit booking that's coming in today.
By mind, the numbers were not very strong, because if you look at the revenue, growth was only 1.5%, and constant currency it was down almost 5%. Even on the operating profit front, on the operating profit, it was down minus 5.4% on a year-on-year basis. So sequentially, when people are reading it, so I mean, for the business like Tata Elxsi, it has to be read on a year-on-year kind of a basis. And transportation is, I mean, 55% of the business only, which there is some traction in the revenue front. But look at the other 45% of the business, they have shown a strong degrowth kind of a number. So 7%, I mean, just one particular piece of the vertical is not good enough for a valuation, where Tata Elxsi is setting on a rich valuation for it to become a buy. To my mind, I think the reports on the bear side makes a more stronger chance, because we have not seen any traction in the transportation side of the SDV vehicles. So there still the traction is missing. Let Tata Technology and KPIT Technology come out with the numbers, and that can give us a more clarity on the industry perspective. As far as our checks are concerned, there's still a slowdown. 6 more months to go before meaningful pickup can be seen there.
All right. But let's also take a look at Tata Elxsi. That counter has had a strong third quarter, but that's not the reason why it's actually buzzing away. It's actually taking it on the chin, down about 4% right now, as you can see on your screens as well. You do have that MOSL note as well, where they've maintained a sell rating. Let's also be taking a look at the earnings fine print when it comes to this one, as well as this particular note that I talked about. Jasmeet is standing by with all of those details.
Well, hi Shreyanshi, thank you for that. If you look at the overall Q3 results of the company, we see a good set of numbers actually. The good growth in margins, good expansion in terms of the overall EBIT, and even the top line has grown pretty well for the company. But the profit sees a slight downtick on the back of that one-time charge from the new labor code. Now, what's happening and why the stock is tanking? The reason why is the valuation stock is very high compared to the other peers in the industry. It's currently trading at 43 odd times compared to the other peers in the industry. If you look at the MOSL note, what they see is they see the downside and they maintain the sell rating with a target price of rupees 4,700. Well, what they see is they say execution was improved in this particular quarter, but the broader recovery is yet to follow. Given only one particular segment of the three segments the company operates in have done well, that's a transport segment, but the media and healthcare are still tanking, which is very important going forward. Well, to also make a note that the overall media and healthcare continues to lag amid the client recovery is still something to watch out for. Further, they also say the wage hikes are yet to come in the Q4, which will again impact the margins going forward. So as of now, it's a wait and watch for a lot of brokerages, but the stock is down 4% in trade.
All right then, so you can see that being reflected in terms of the bearish rating that MOSL also has. Seems like the market also, the street also has that particular rating as well, Jasmeet. But